Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, June 30th, 2010. Let's have a look at the markets. This is the Dow Jones Industrial Average. This is a 6-month chart. Each one of these candlesticks is 1 day. You'll notice today's selling happened at the end of the day just like we expected. People are betting ahead of the unemployment data, so they sold off as people are very bearish and expecting it to be bad. Ultimately, the unemployment data can't really be good, so it's either going to be, really bad or no news, basically, just a continuation of the really poor, economic environment we've had for a while. So there's really no reason to expect good news here. Having said that, you'll notice that the market has sold off for, let's see, 5 days on the Dow Jones Industrial Average here, consecutively in a row. That's getting to their high end, 6, 7. Look for a bounce. You also notice you're starting to get the oversold condition here. We won't be buying it if it gets oversold, but we would be anticipating a bounce. So keep that in mind. The most important thing, though, when you're looking at that, you're wondering, okay, is there a bounce coming here? I mean, sooner or later you're going to, no market falls straight down, no stock, no market. Okay, so sooner or later you're going to have those up days. The main thing to note here is right there. That formation is not a hammer. That is a hammer formation, okay? This is not a hammer formation, therefore this is not the bottom. We told you the same thing back here, okay? See this nice sell signal here? It's a continuation signal. That's what that is. It's not a hammer. Okay, so keep an eye on this. It's not finished here. We're not finished selling off here. Some other indexes have already traded below the lower Bollinger Band line and things like that. All these things can add to a reflex knee-jerk reaction where markets bounce for a day, but a bounce is not the end of a sell-off. Okay, so keep that in mind. We're going lower here, and we're trading right above the neckline here. This neckline we've been talking about. We're looking at this head and shoulders pattern that's been setting up here. Very bearish sell signal, and so we've already peaked. And now a break below this is just the start before you duplicate the size of this move here. Will be duplicated, and I think that was like 1,300 points. That will be duplicated to the downside. So you do not want to be jumping off too early, okay? Very important there. Here we are looking at the FTSE today. They closed up 2.65 points, trying to get a little reverse system out of them. But if you'll notice, this hammer, this candlestick right here, today's candlestick, it is an inverted hammer. All right, I know some other technical guys out there are going to say, no, that's okay. Look, to me, there's only 3 candlesticks that matter, and there's only, all 3 candlesticks fall into one category of these 3. Okay, I'm sorry, all candlesticks fall into one of 3 categories, and this would fall into my inverted hammer category. Yes, Perfect Stock Alert is a little bit different, so don't send me all these emails explaining technical analysis to me. But thank you anyway. Anyway, so the inverted hammer here is telling us that this is not the bottom. Okay, so you can bounce along, but the end result will be you're going to go lower. All right, awesome. Here we have the NASDAQ. This is a 6-month chart. Each one of these candlesticks is 1 day, and you'll notice I didn't draw this out yesterday, but this is still the same head and shoulders pattern we've been looking at. Okay, on all the major market averages, it seems like, and we broke down and broke through yesterday, and then continued today, confirming it. A break below the neckline. Okay, so this move right here, all this, I haven't done the math on it, but basically between 2100 and about 25, so about 400 points to the downside expected. Okay, that's your target for that. So again, no reason to do anything but short. This is a chart of oil, and you'll notice that we have an inverted hammer here today, right there, telling us that this is not the bottom. There could be a support line here. She tried to reverse today, but she gave us an inverted hammer signal that tells us this is going to break down. And you've got 1, 2, 3, 4, 5, 6, 7, 8 consecutive days to the downside. That's a lot, and you will be getting a bounce sooner or later in oil, but that signal right there tells you that this is not the bottom. Had it been a hammer, you'd have a different, situation, but this is an inverted hammer, basically a hammer upside down. Looks like an arrow pointing down, and that's a very bearish sign for you, okay? So, yeah, I'm not short oil. I've given reasons before why I'm not doing that, but a lot of guys are, and they're making good money doing so. All right, awesome. And what we've just done here is we've gone through all these charts and we've given you forward-looking data. Okay, we've told you these signals tell us this. All right, now we've done that consistently before as well, and now I want to go back over what we said before and point out with hindsight how it worked out. Okay, so you get to trust this these different signals that I'm giving you every day. Back on the Dow Jones Industrial Average, back on this day, we told you you'd sold off substantially, and you had an inverted hammer right there, marked by that red arrow right there, and that is telling you that this support is not going to hold. We told you at the same time she had fallen substantially, so she could bounce, but the end result would be a breakdown. So here goes the bounce, and there goes the breakdown. We got the exact same situation here, and we got the bounce, and the end result was a breakdown. She goes lower because this signal right here is an inverted hammer, arrow pointing down. It's telling you everything you need to know. All right, we just showed you that exact same thing on the oil chart. Here we have the S&P chart, a 6-month chart. Each one of these candlesticks is 1 day. You'll notice back here we were talking about once a trend line has been pierced, like you had right here, it's a preemptive warning that it's about to break down, and that's exactly what happened. Okay. All right. Back here, it showed you the same thing. She was piercing. That's a warning she's going to break down, and she just did it. Okay. Okay, this is the updated S&P chart. You can find these charts on our website at any time at a 100% free website at perfectstockalert.com. They're always there and updated daily. You'll notice I've updated it to show the neckline. We have that already marked for the Dow Jones Industrial Average. Now I've added the neckline for the S&P, which is broken down today, and as well as the NASDAQ. Okay, so the only one from the Dow Jones, the NASDAQ, and the S&P that hasn't broken down is the Dow Jones. It's actually the weakest of the 3 charts, so it's just taking its time, but it will do it. And it's also, well, that doesn't matter. Anyway, the main thing here is that she is just breaking the neckline. That is a very bearish sell signal, and there's much more selling to come. You might get a bounce here and there day to day, but the end result is going to be much lower. Okay. I'd like to congratulate all of our users who've been following us for some time. You're making tons of money, and that's the objective, right? Right. The main thing I want to point out today is that don't invest or trade upon what the market's doing today. Keep looking ahead. All right, that's the trick here. I mean, back on this time period, right here when we had this bounce, and we told you the bounce was going to come before it happened, we actually nailed that thing dead on, as well as this one. So we had called this bounce before it happened, and then we called this bounce before it happened. And in both cases, we shorted into it. It might have been uncomfortable for a couple of days, but we're not looking at what the market's doing now. We're looking at what the market's going to do. And if you can do that and you do it well, you'll be able to, like we did here, when the market's bouncing, short into it as opposed to going long, and then you get the payday in the future, which is going to be much, much bigger. Remember, like I said yesterday, you want to work with the trend, not against it, all right? The big trend is lower, so stay short. Pretty simple. We don't have any fundamental reason to do anything else, okay? Awesome. If you've not been to our free website at perfectstockalert.com, you're missing out. It's 100% free. All we ask in return is you refer a friend. It's right there, okay? Awesome. Also, let's have a look at our disclaimer. Before we do, subscribe to the YouTube channel. Seriously, or I'll hit you with the stick. Okay, said that. Yeah. The disclaimer. Hey, remember that our next live trading course begins on July 6th. You can go to our free website and read about that. Awesome. Take care. See you all there. And let's just keep making some money, because that's just, you got 2 choices. You can either make money or lose money. Might as well make it, right?